Good Monday morning. It's Monday, October 27th, and I'm Drew Wright with First Heritage Mortgage. My MLS ID number is 589370. It's getting a little cool here on the Outer Banks. You might notice my ski in the background. I like to keep that here just to remind everybody I'm an avid water skier. Unfortunately, I had to take my slalom course out yesterday and put it away for the rest of the winter. But maybe I'll make some trips down to Florida and do some skiing down there. Anyway, we talk about mortgage financing every week or a topic of interest, maybe. And this week, we're going to talk about refinancing and ask, is it the right time to look at refinancing? And so, based on all the economic indicators of how we measure mortgage applications, the public is saying it is time because 53% of all mortgage applications in the last few weeks have been refinancing. I'll tell you, even for me here, it's a little higher. After being out of the office a little bit, I didn't have quite as many purchases ready to roll. So I called a few folks that were in the 7.5% range, and they're definitely interested in and have applied to refinance. Alex has taken a few too, maybe not quite as many, but I've been at it a little longer than he is. My customer base is bigger, and he's been working those purchases hard while I've been gone. So, what are our 30-year fixed rates? And again, is it the right time? Let's talk about that a little bit. So 30-year fixed rates can be had for around 6%. That's a pretty attractive rate when rates have been, for some borrowers, as high as maybe 7.5% that are even grade A, pretty large down payment borrowers. Just maybe bad timing is when they bought their house. If your loan is small, it may be not really overly compelling to refinance it. But, I'm going to use a $500,000 loan example to give you where you might want to do it with a 1% rate difference. So with a $500,000 loan amount, if you're at 7% currently, your payment's $3,326, and it's going to drop to $2,997 if we do a refinance from 7 to 6%. That's $329 a month. The cost to refinance your mortgage is about $4,500. Nobody likes to pay fees, but you got to pay your attorney fee. They're roughly $1,000. The title insurance is $1,000, and thus, unfortunately, we have about $1,000 in fees. So that's $3,000 right there. There's a few other minor things. The appraisal, obviously, is not a minor thing, but that runs it up to about $4,500 on this loan amount. But if you're saving almost $330 a month, you'll get paid that back in less than 14 months. Almost a year, you've broken even. So if you keep the loan just for 2 years, you've come out ahead and you've saved on a cash flow basis $330 a month. So that, in my opinion, is worth looking at. Another thing to look at is really how much interest would I have paid if I kept that mortgage at 7 versus 6. And I think this is an eye opener, almost a shocker as I thought about it when I was writing this newsletter. You pay $698,000 almost in interest if you keep the 7% rate. If you take it to 6%, you pay $580,000 in interest. This is about $120,000 savings if you refinance it from 7 to 6%. So in this example, we did a 1% improvement in rate. I think the math speaks for itself that it's worth it because you save the money in 12 months, you're well paid back. And if you keep the loan for any length of time, 5 or 7 or even 10 years, you're saving a lot of money and a lot of interest. Yes, if rates go lower, you may want to refinance. But if you're saving enough money in 12 months, then it's not a big deal. It's just a bonus. You're locking it in, and we don't know this is going to last forever. So I do think also that it's worth looking at 15-year mortgages. I might delete this plug for 15-year mortgages because if you do a 15-year mortgage, you're going to pay your mortgage off. And the reason I'm going to talk about it is I've had some situations lately where I talked to folks where they had built a house or bought a house in Outer Banks. They had told me when they're going to buy, they were going to sell another property and move here permanently and pay this loan down substantially, but not to zero. Or they were going to get a bonus and pay this property down substantially, again, not to zero, but maybe down to $250,000, $400,000, or $500,000, and it had been $1 million or whatever dollar loan amount. And so they were prepared to make a pretty large payment to begin with. And they may have made that payment for a few months or even years and then have paid it down. But they've got a 6.75% rate. And now they owe, say, I'm going to use a small loan amount, 250. 250 is it is by all day standards a pretty small loan amount, but we did see this just the other day, and so I like this comparison because the gentleman's rate was 6.75, and if I gave him a 6% rate, it only saved him about $120 a month. Well, he's like, I can't even hardly take out my wife and to dinner and eat, have a couple of drinks and do it for that. I mean, it's just not enough savings to really want to do it. And so I said, okay, all right, I saw your point. So what if we talked about a rate that was another, 3/4 or 5/8 lower, like a 15-year fixed? And today that rate is 5.375%. Pretty attractive rate. So, what's the benefit? Well, the benefit is instead of paying $333,000 if I refinance it at 6%, and even more that he's going to keep that 6.75 loan, he's going to pay only $114,000 in interest over the life of the loan and save $220,000. It's a massive amount of savings. It's $200,000. It's probably $250,000 if you kept the old 6.75% rate. I actually didn't do that math. Sitting here thinking, well, I should have done that math maybe, but to make it more compelling. But the payments will not be less. The payments will end up probably being $300-$400 more in this case. But again, that's maybe a little bit more he's going to save and spend on that night out with a couple of friends. So, if you think about that, it's very doable. Plus, again, remember, these are borrowers that have paid their mortgage down, but lump sum, or just lucky enough not to have borrowed as much money, but maybe have a higher rate. Just consider a 15-year fixed rate. It's a good long-term saving strategy. Get out of debt. Believe it or not, I love to see people pay their mortgage off, even though I'm a mortgage lender. And I remember when I first got into this, I got customers and friends. I taught them into 15-year mortgages, and they haven't had a mortgage with me for a long time because I've been doing this for almost 40 years. So anyway, second homes and jumbo loans are just a little bit different when it comes to refinancing. Second home rates are not quite as low as primary residence rates. They're about a half point higher. So you're at 6.5. So it's a little less compelling. But we do have a lot of second home buyers, and this conforming loan amount, I'm talking about conforming loan amounts right now. These are loan amounts of 806,500 or less. That's the conforming limit. If you're at 7.25 or higher, I would tell you to look at refinancing. This could be a short window. We don't ever know when this window is going to end, and you don't want to miss out. If you're at 7.25, getting 6.5 is all worth it. If you're a jumbo loan and you're a second home jumbo loan amounts are roughly the same. There's not that much difference. Very similar in rate. And I think it's worth noting right this minute that you can get a jumbo second home or a jumbo primary residence rate at low is about 5.5%. Those are really great rates. And if you do believe rates are going to go lower later, maybe you'll get a 5.5% 30-year fixed rate. You can refinance it, but you didn't lose the rate savings that you have. Obviously, you'll save the money in 12 months or less, depending on the loan amount. These jumbo loans, instead of obviously being $325, if you do $1 million loan amount, it was $330 a month. It would be $660 a month that you would save. Much more compelling, and the closing costs, while they're a little more for title insurance and things, they're not going to be more than say $6,000 versus $4,500 to $5,000 for a refinance of a $1 million loan amount. So the question is, again, we come back to this all the time when we talk to borrowers, is this as low as rates are going to be? And what should I do if I really think they're going to be lower? The problem is we don't know the answer to that. Nobody does. If they're probably on Wall Street or a hedge fund making a lot more money than we are. And even those guys, I think, sometimes are good guesses. So my personal position is that the rates are stable right this minute. We've got really a pretty even economy. We expect the Federal Reserve to lower the discount rate later this month. We expect them to lower it again in December. These are sort of methodical rate reductions that we've been talking about for a long time. There's been push to get Jerome Powell to lower rates and his team, so to speak, and they sort of resisted it. And now they're coming into, okay, we'll lower rates for a while. But next year, there's no guarantee that will continue. Plus, Mr. Powell is not chairman after May. His term runs out and there's going to be a new person. And of course, Mr. Trump has talked about removing a Fed governor for, ethics violation, his opinion. And so that's being brought back to the forefront in January when the Supreme Court is going to rule on it. So I think right now we have stability with our Federal Reserve. We have nice lowering of rates with the discount rate. And in the future, we might have some instability, a little over aggressiveness in lowering discount rate. If we got that, I think the markets could think that they're willing to accept higher inflation. And regardless of whether they lower discount rate or not, it will cause rates to go up. And I've seen that happen. Lastly, I'd like to point out is if you want to apply, obviously we want you to call us. We'd love to help you, whether you got your mortgage from us or not. We can do mortgages in other states, by the way. But I wouldn't be locking your rate or should tell you to lock your rate the day you apply. I always try to nick out just a little bit more if I can, another eighth or a quarter improvement or rate. Maybe I can get you to 5 7/8 or 5 3/4 today's rate, 6%, or 5 1/4 or 5 1/8 today's 15-year fixed rate is 5.375. It's a little risky, but honestly, I feel like it's worth it right this minute. It's risky in the sense that rates can go up before we can react. But I'm really good at staying in touch with you. We can text, we can call each other, we can email. I really find that texting is a great way to update you on rates and for you to inquire. And I can give you a rate usually back in seconds or a few minutes if I'm busy about that. So anyway, I hope you call us if you're thinking about refinancing. I do think it's a good time to do it. I really honestly would tell you that don't miss the opportunity. We've seen rates come down and then go back up. If they go back down, that's great. To a lower rate. You'll have saved money in the short term and you'll have peace of mind for the next few months. Thanks for listening. Have a great week and call us anytime. Thanks.